We're coming here 5 minutes late because Chicago is a shithole with shithole transportation. And I was stuck on the L for 20 goddamn minutes at the Grand Avenue station with the bums and the homeless people smelling like smoke. So I'm literally ready to kill someone. Coffee will help. Tom, how are you? Nice to see you.
I am good, Jim. I'm glad you survived the L.
I'm going to predict that this is going to rank among Tom's top 5 favorite intros.
Yes. Welcome to the Futures Edge Show. I'm Jim Urio. That's Bob Iacchino. He's the co-host and the brains behind the operation. Today, we are welcoming Tom Luongo of Gold, Goats, and Guns, which happen to be 3 of my favorite things, by the way. Like even goats. I've eaten goats in Jamaica many times, and goat cheese is my favorite. It's the only cheese I can eat, by the way. So I'm a big fan of goats. Can you tell us the meaning of gold and guns is obvious, but why goats?
Okay, well, there's a couple of reasons. There's probably 3 or 4. One, I raised goats for about 13 years. So I live on a hobby farm. Well, not really anymore, but it used to be a hobby farm up here in North Florida. So I had about 14 acres, and we raised goats, and I made goat cheese, and I milk goats every day, and I did the whole thing. We used to go to the farmer's market. I used to make yogurt and cheese and all sorts of stuff, right? But when I thought about it, when I was putting the whole thing together, I used to work for Newsmax, and one day my publisher at the time said, I'd love to do a promotion with Tom, called Gold, Goats, and Guns. And I just kind of stuck in my back of my head. I'm like, okay, interesting. And then when, I got laid off the first time from them, no blame, no shame. I'm back with them now. Been with them since 2019. When I had to go independent, I said Gold, Goats, and Guns. And I thought about it. And I'm like, it's a portfolio strategy. It's gold, savings, goats, industry, guns, defense, hedging. Right. So you have an income portion of your portfolio. You have the stuff where you have your big caps and your stuff that your investments where you've taken on risk after you've gotten some savings. And then you have some hedges that you use to defend your positions. And metaphorically speaking, I think it all works really well. And it's not really it's not like, I wouldn't say it's innovative or anything. It's just a nice way of reminding people these are the 3 pillars of any well-designed portfolio. So that's the way I look at it. And so you just, do your capital allocation based on your risk profile.
Love it. That's brilliant. I didn't know that that's what it referred to. I knew you raised goats. Mm-hmm. I knew you owned guns, which is why I've never tried to steal your gold. So,
well, and this is the point, right? I mean, if dogs started with a G, I would use dogs.
No, but Guard Dogs does.
Yeah, Guard Dogs does, but Moremas doesn't. So, and I'm a big, Great Pyrenees do. So you can go, I guess you can go with Gold, Goats, and Great Pyrenees. It doesn't work.
It doesn't work. So, the goats works. Tommy, before we get into some of the meat of what I really want to talk to you about, I want to get your opinion on, we're recording on the day that CPI came out stronger than expected. And I don't know if you follow the data day to day anymore, but this is the second consecutive month of higher core inflation, right?
Yep.
But the Fed found, an inflation that represents everything you spend except anything people spend money on.
Super cool.
So that's actually heading lower. So give me your opinion on inflation, just sort of generally, and the Fed as it sort of goes around the periphery of inflation.
I was a little surprised last month that inflation started to come back as quickly as it did because the price of gasoline hadn't quite turned, but then it did. And then the price of gasoline turned a couple of weeks later. I'm like, ooh, this is not good. Because I came across, I figured this out a little while ago. Since COVID, we've been in a commodity cost push inflation environment, right? We haven't been in a kind of demand pull environment where, we're pulling interest rates up would then pull back on credit demand, which is the whole, that's what the Fed has the most control over. They don't really have control over commodity prices. Like they don't have that. So from the beginning of this, I said, look, they're going to raise interest rates into a commodity cost push inflation coming out of COVID. Why are they raising interest rates then? Because the interest rates aren't going to solve that. And part of what I had been thinking about before that was that, okay, maybe Powell's tightening for different reasons. And I had come up with that argument back in 2021 when he raised the reverse repo payout 5 basis points over the Fed funds rate. But where we are in inflation right now, since then, so everything's tied to the, Zero Hedge has written multiple articles about this. 65% of the inflation we see has been tied to the price of gasoline. So all I did was I turned around and I said, well, let's take the CPI. It's a bullshit number, but let's take the CPI and let's see if we can find, some correlation between it and gasoline prices. So I just went ahead and took the futures monthly closing price of gasoline and plotted it against, some amount of trailing inflation, CPI inflation reports. Turns out if you take a rolling average of the inflation print for the last 4 months and you track it versus the monthly closing price of gasoline in the futures market, there's a remarkable correlation in direction. And with a 1 month lag, meaning once gasoline starts to rise, then boom, and the direction of inflation starts to rise. And it's exactly what we saw. We're seeing it now. And it's that correlation is still in effect. So we're still in a commodity cost push environment. When that breaks, then we won't be. And we'll be in some kind of credit demand environment. But until we're done with that, the correlation, no, this is as predictable as the day is long. And Powell is using this as a means by which to continue to keep interest rates where they are, because his agenda is to break the Fed put and to break the Eurodollar markets in order to bring domestic monetary policy back under domestic control. We always had that problem that LIBOR ran effectively ruled the roost, right? Now LIBOR doesn't rule the roost. Now SOFR rules the roost. And Powell, you can use inflation as we're not done yet. Oh, the employment numbers are still good enough. So, we're not really ready to cut interest rates yet. Yeah, suck it, Lagarde. And that's really what it comes down to. Is it really does mean at the end of the day, Chrissy, you can go. We are not setting up monetary policy to fight climate change, which is another way of saying to bail out the vulnerable European banks, which are all tied to their sovereign debt market, because they don't have a corporate debt market. So as we've been raising interest rates and they've been forced to go along with us, like all their banks have got like, man, you think we have holes in our regional bank balance sheets? Go look at Germany, go look at France, go look at Italy. Like they were screaming about Italian banks being in trouble because they were over leveraged relative to Turkish debt back in 2018. That was when we were still at the zero bound. So where are they today? Where we are today is that the minute Powell started raising, what's the first thing Lagarde did? Announced a QE program to manage credit spreads, the TPI, the Transmission Protection Instrument. And she's been managing credit spreads like you wouldn't believe for over a year now, in order to try and keep Europe's banking system from melting down.
Is Europe's banking system going to melt down?
I think so. I think that's the race. I think the race at this point is who cuts first. Whoever cuts first, be it Lagarde or Powell, they're the ones that lose the credibility first. And Powell's done everything he could and has been able to do to regain the Fed's credibility after 13 years of, Bernanke and Yellen and previously Greenspan. Right, he's got to get the markets to finally admit, no, really, we're serious, and this is the new sheriff in town. This is the new regime. We are going to cut back on credit. We're going to global credit. We're going to bring the dollars home in effect, and it's going to be a slow process. I know you're not going to be happy about it, and a lot of people are going to go broke. But you know what? Tough. It was interesting watching this. Like I came up on this idea, and then I felt like I was the only person in the world talking about this, or at least theorizing about this stuff. And then there's Daniel DiMartino Booth out there going, "No, that's what Jay wants to do. Jay wants to kill the Fed put." No, he really does. I don't know whether he's going to be able to do it or not. And I'm like, oh, thank God, I have somebody else with some amount of understanding of this. And then you get guys like Joseph Wang, who are out there explaining to everyone there's so much liquidity in the system that we can weather this. The people who can't weather this are the ones overseas, because they're leveraged to the tits thanks to 13 years of ZIRP and the Bank of Japan being at the zero bound and the ECB having gone negative and everything else. So there's all these levered dollars out there and I'm talking broad sense here. I'm not a market plumbing kind of guy at that level. What I've done is like identify some of the big trends, and I've had the market plumbing guys go to me and go, yeah, that's what it looks like. I'm like, thank you. Okay. But that's not my bag is not to go into the deep plumbing and go, yeah, I can see it here and here and here. But it just makes sense that in the long run, who's the most vulnerable to this, and what would be the catalyst to allow the United States, or what would have been the change that would allow the United States for the first time to raise interest rates and then not have to go back to the zero bound the minute somebody else got in trouble?
I was going to take this in two directions. You mentioned liquidity and you mentioned plumbing, and I don't think glossing over the reverse repo market is going too deep into the plumbing. I don't think you would either. But I also want to talk about the Japan thing, because I think Japan is fascinating as well. But let's start with liquidities first. Okay, by my little thumbnail calculation, there's still about $2.5 trillion above the ridiculously high money creation trend that went from 2011 to 2020 or 2019. Still $2.5 trillion out there too. There's still 450 billion in the reverse repo market that's waiting to be grabbed by the Treasury and injected back into the system. When that money runs out, do you think that'll be the signal that liquidity is running out, and that's when burning timbers are going to start falling from the ceiling, or what?
That's the current thesis, right? I'm not sure that that's the case. Like, it may be. Like I don't have a good feel for that, Jim. I'll be honest with you, but I know that's what everybody wants to believe. It's like the whole zero hedge set. I hate to throw. I don't want to. I'm not like that's been their thesis, right? And I'm not sure that I agree with it, because we were at $450 billion before Powell created that big pile, right, in the reverse repo facility back in 2021. I just think that the longer this goes on, the more the banks have an opportunity to repair their balance sheets. And they have been, slowly. I mean, it's not great, but I mean, I don't know. The other day I looked at, I was looking at the XLF the other day, just like, let me go look at XLF. I hadn't thought about it. Like, what does the market think about where the banks are? And XLF is breaking out to a 2-year high. The XLF, just hit, like $40 a share. And, I think the 2021 or 2022 high was around 38 or something like that. I'm like, damn it, I missed another trade.
For the XLF, big or medium?
Yeah, it's big. It's big. That would be big caps.
Okay.
So, and I know the regional banks are going to be are going to be struggling on this, and but I know that I mean, I can tell you, I look at my local credit union, and I'm getting mixed signals from them. They keep raising the rate on both CDs, deposit rates, and HELOCs all at the same time. So they're trying to attract more capital by, offering better rates on 7-month CDs and whatnot, and slightly better money on, interest-bearing checking and money market savings accounts. But at the same time, they're also sitting there, they're raising the HELOCs to over 9%. And this isn't a hot market like Gainesville, Florida, right? Where the real estate market is, it's insane. Yeah. So you have to ask yourself the question, like, why are they in that? Why are they doing that? So I'm not saying that we're not going to, I hate to use this again. I'm not like, we're not going to get our hair mussed or nothing. We are. It's going to be ugly. But the bigger question is everybody else going to be worse? And so, and the other thing I want to say in this respect is as follows. Once we reach that moment, right, and we hear that, Deutsche Bank and Commerzbank and all the German banks and Credit Agricole, they're all overexposed to U.S. commercial real estate as well. I think we have a bigger muni bond problem here in the United States than anything else, right? That's a big one. That's another issue as well, because tax rates are going to start dropping as places like Chicago, are going to be in trouble real estate wise if everybody leaves. The same thing is happening in California. When you put it all through, like, if they start to fail, where's that money that's currently in Europe going to go? See, one of my patrons the other day threw something out at me that I hadn't thought about. He's like, maybe, Tom, all the capital inflow into the United States has already happened, because, he did a back of the envelope calculation. He said, look, we saw all this capital inflow up until about a year and a half ago. And then it's, we've had about 1.6, maybe 1.7 trillion, total in capital, like looking at the bond markets and the equity markets and whatnot. I just do a rough back of the envelope calculation. They said, we've had about 1.6 trillion flow out. I'm like, yeah, and that could be a counter market trend, right? It could just be a counter market rally. Whereas we had a whole bunch of money flow into the United States in the initial flush. Now we've had a little bit of it flow back out again. And then is that going to flow back in the minute Europe actually gets into trouble? Because over that time, we've seen, Lagarde maintain credit spreads. We've seen the price of oil come down. We've seen inflation come down. So maybe everybody's thinking, okay, well, yeah, the Fed's going to cut rates, blah, 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 and this is what's going to happen. And if Powell doesn't cut rates until, say, Jackson Hole, if he cuts at all, what do you think is going to happen? If there's any kind of fiscal responsibility that happens on Capitol Hill, if this Biden budget gets like completely crushed for example.
Wait,
and
hold on.
Mike Johnson holds the
said
line on
fiscal.
everything. What happens? Everybody's going to go, money's coming back into the U.S. It's going to flow right back in. Dollar's going to go to the moon. And, our regional banks will then get a whole bunch of capital infusion in effect, because a whole bunch of money is going to flow into the U.S.
No, and Bobby, I want Bobby to ask the next question, but you said fiscal responsibility from Capitol Hill, but you didn't pause for laughter. Didn't it say on the screen, fiscal responsibility, pause for laughter?
I know everybody thinks I'm crazy, but this is what happens when you get a Fed that stops underwriting fiscal irresponsibility on Capitol Hill. And when you have the kind of movement we've seen politically, everybody's now prepping for Trump to come back, right? We have Mike Johnson, Speaker of the House, and he's holding the line on foreign aid with a 1-seat majority in the House. How is that happening? I mean, you mean to tell me they can't hire a couple of large Mexican leg breakers to go beat up a couple of Republicans and get them to vote against this crap? That's what's always happened in the past. Right. And so apparently we have better leg breakers. The fiscal responsibility, what I would call the sovereigntist wing of whatever the power structure is in the United States. And I personally think it's centered around the Fed and the New York money center banks are all going, you know what? Fuck a whole lot of these Euro commies. We're not doing this. And y'all work for us now. Oh, by the way, you always worked for us. And that's fine. I don't have to like Jamie Dimon. I don't have to like Solomon or any of those guys over on Wall Street. I just need them to start saying, oh, no, we're going to reinvest in the United States. We're not sending this capital overseas anymore. Because, well, clearly, we're not putting the money in China anymore. And in no way, manner, shape, or form are we going to pound sand down a rat hole called Ukraine or any of the other shit that's going on in Europe. Like, who the hell wants to invest in Europe? All they want to do is harangue you and steal your money. What you see out of the Biden administration is clearly treason. And once you see them as nothing but vandals intent on destroying the U.S. and treasonous, literal snakes in the grass, once you frame it that way, everything on Capitol Hill makes perfect sense. What you're starting to see within the GOP, Lara Trump taking over, not killing off 60. She fired 60 people at GOP Central. Like, she got rid of all of the globalists. Like, I just saw this morning. I'm like, honestly, guys, I never thought I would see this. I theorized it. I hoped. I went to bed at night going, with my rosaries going, I'll pray for it. Not that I'm Catholic anymore, but, metaphorically speaking. But come on, man. No, of course I was laughing my ass off thinking that this was and then it's happening. Okay. Okay, let's do this.
Let's do it.
Let me take a little step back in something you said, Tom, because it struck me as something we should dig into a little bit. You talked about Powell cuts and then loses credibility. So to me that, and if I quoted you wrong, let me know, but to me that implies that you think at least so far he has credibility. And you mentioned Bernanke and Greenspan, and you left out Yellen, whose name we don't really like to mention. Did I leave out Yellen? Yeah, but in terms of the lack of credibility, you could just say lack of everything with Yellen.
Well, a lack of brains.
I'm trying to get my mind around. So I have a stance that the Fed shouldn't cut rates and is going to, right? That's sort of my base case.
Which is
why I want to be long stocks and I want to be long gold at the same time, which I've rarely said out loud. I think the Fed, some people were going crazy last week saying that the Fed has accepted that their target is no longer 2%. I think Powell, and I want you both to tell me if I'm nuts here. I think Powell is going to continue to say that 2% is our target, but he feels like something Jimmy's fond of saying, that the cure for higher prices is higher prices. He's going to go ahead and cut rates and let the economy reflate a little bit and hope that it reacts like 2018 when we had a 2.9% CPI, or 2017 when we had a 2.7% CPI, and just kind of comes down on its own rather than the Fed having to sort of hold rates where they are. And then he can claim a soft landing. All of that to me means you're not credible, you're an asshole. So where am I wrong? And I'm positive I am, but just help me out.
Here's the gig. Did you ever think we would get to 5.5%?
Never.
No.
Okay, so if he cuts back to 4.75% over 6 months, does that make him an asshole?
No,
that's what he's saying too, right? Is that we are somewhere above whatever the neutral rate is, right?
But I just let me just throw this.
I
don't understand the conversation of saying that we need slack in the labor market to develop in order to cut rates 6 to 8 months ago, and there's no slack in the labor market showing yet. And I understand it's sort of a delayed indicator. It's a rear-looking indicator, whatever you want to call it. But there's no, I mean, even wages, they're still, you look 6-month annualized on wages, their services specifically growing at like a 5% clip.
I don't think he's going to cut rates. And I'm saying, I don't think he cuts rates before Jackson Hole. Okay. And the only reason I think he cuts rates before Jackson Hole is if something breaks. I've been saying the Powell's not going to cut rates. Look, guys, you guys opened the show with inflation, right? Yeah. If inflation continues to come back the way it is, I could make the argument that Powell's going to turn around at Jackson Hole and go, we can't cut rates at all. And maybe he has to raise rate, and maybe all he does here is hold them and then start raising again.
So you're saying
I honestly think that he's in that position. I'm sorry, go ahead.
Is he political?
Powell? I think he's in a position where he has to be because things are so bad. What I honestly think Powell is trying to do, and I know this sounds crazy, but I keep going back to stuff that Martin Armstrong's been writing off for years and saying, look, if we went back to the original conception of the Federal Reserve as a lender of last resort that just creates elastic money during times of crisis, and that's its job, and we go back to that. And we go back to regional interest rates and all the rest of it. Now, we're not going to get back to regional interest rates in any way, manner, shape, or form legislatively. I think with long-term, SOFR can just do that on its own. If it's a domestic debt indexing rate, then Mississippi can quote SOFR minus 0.25 and California can quote SOFR plus 0.5, right? We can go with a monolithic Fed funds rate for the country because we've got SOFR, and SOFR eventually just replaces the Fed funds rate if we're going back to that original conception of the Federal Reserve. Remember, doctrinaire Austrian over here. I don't even believe in any of this shit, but I'm arguing, okay, within the framework of what we have, what would be better? Well, bringing the Fed back to its pre-FDR days would be far preferable to what we have today. Now let the banking system do what it's going to do. But we have to, but you're here at point A. How do you get to point Z? Well, it's a long path to point Z. And he may have to zig and zag as he goes along, and he may have to deal with, stuff that happens. But if that's the plan, and I don't know that it is the plan, but let's just say for the sake of argument that it is, because he's acting like it is as of right now, then what you have is he can continue to use the rhetoric and the macro data to say, I'm not going to cut rates. And he just keeps coming out every month. He said it the other day. It's like, we're not even close to having a conversation about when we're going to cut rates. Said this at the Humphrey Hawkins testimony the other day. He hasn't ever wavered on this. Powell didn't pivot in December. The dot plot pivoted because we put a whole bunch of fucking commies on the FOMC. No, seriously. If you go back to the friggin' insider trading scandal, the whole point of it was they couldn't get rid of Powell to get rid of all the hawks and put Lael Brainerd's, swinging buddies with, for Christ's sake. Like, that's what we wound up with.
This is fantastic. By the way, when Bobby asks his last question, he does this to me sometimes when I get going. He's trying to slow it down, talking to us like we're mental patients, which I think is fantastic, by the way. And I want to put the pedal to the metal. But here's what I'm going to say, too. He did actually physically pivot once, exactly a year ago. When SVB went, he opened that window up, and that increased his balance sheet by a shit ton. That was QE, right? Like, what's to say he's not going to pivot quickly when the bank's in trouble?
I agree with Danielle. I don't think the BTFP was QE at all. If it was, then it would have been, he would have been giving that money out for free. He gave that money out for FFR plus 10 or 15 basis points. And if it was QE, that thing would be $2 trillion. It was $150 billion over the course of the year. And only, I might add, because the worst banks needed another way of not going to the discount window. Moreover, a lot of that money, there was that weird arbitrage trade that happened for a while where people were using it, and the Fed didn't see it. The minute that somebody made them aware of the fact that there was this weird arbitrage, bad banks, no biscuit. You don't get to have any more free money. Like, it was really obvious that they didn't do QE there. Moreover, Jim, let's really think about what he did. During the middle of the worst regional banking crisis since 2008, he fucking raised interest rates by a quarter point.
That's true.
That's a good point.
That meeting. He's like, he comes out and he raises by a quarter point, and everybody's like, Like all that was a classic, like two things. One, I think that all those banks were executed by the Fed and the New York boys in order to get them off the board because they were all effectively what I like to call Davos banks. They were all billionaire oligarch banks giving Mark Zuckerberg and Jeff Bezos, loans against their stock portfolios at 1% and then levering that shit up to buy DAs and electors and elections and all that other shit. That's what it was being used for. They all got executed by the Fed. They all got bought, by the way, out from underneath the San Francisco Fed. Remember, they were all San Francisco Fed banks.
Yeah.
So they were all under Mary Daly. Who is the protege of whom? Oh, that would be Janet fucking Yellen. And then they all got bought by New York Fed banks. Really? I'm so shocked to hear this. Like, dude, I'm serious. Like, I went through the whole thing and I'm like, oh, that's what happened. This was an execution. Get rid of these guys, move the worst of those banks, and let everybody know that if you continue to act like this, we're going to execute you too. I think they executed FTX as well for the exact same reason.
I love it.
I think FTX was executed on election night for exactly the same reason.
If this becomes the history as written, man, Jerome Powell is going to be one of the biggest heroes the Fed's ever produced.
No, they're going to replace the name of the Mariner Eccles building.
Matters to him.
They're going to rename the Mariner Eccles building after him. Danielle's the one who said that. I'm just cribbing her. She said that the first time. I'm like, no, that's hilarious. But no, I'm serious. When that happened, and then he cuts a deal with Yellen. Yellen is really angry because she's been doing yield curve control, subtle yield curve control by issuing 83% of last year's treasuries at less than 1 year.
Jimmy's been talking about this a lot.
That's been
my thing. Then what happens? And then everybody's like, the Fed's going to cut in March. The Fed's going to cut in March. The Fed's going to cut in March. Why? Because of the BTFP. Because of this. Because of this. Because of that. It's all designed. It's all bullshit. It's all a big fucking circle jerk. It's absolutely every bit of it. And Powell's just sitting there going, yeah, that's nice. Bluff called, Yellen. I still have aces. Show me your 2-7. Show me your 2-7 offsuit, you stupid cow. That's what you have. Yeah, I have aces, and I fought my set. Like, that's all he did. He's playing against a woman who doesn't even know the friggin' odds, for Christ's sake.
Bobby, this is the perfect guest. Bobby.
I'll tell you, it's funny because today David Kelly from JP Morgan was on opposite Ricciuto. Ricciuto to me is like he's just smart, and they both had the same consensus that the Fed was going to cut rates. Obviously, Tom don't agree with that. But Ricciuto was saying, yeah, they're absolutely out of their minds for doing it, but they're going to do it. And David Kelly, he used this analogy, which I just thought was like, what are you talking to 5-year-olds? He said, basically, the cookies are done. They need to come out of the oven. They're just not cooling as fast as we need them to, which essentially means if you bite into the cookie, you're going to burn the fuck out of the roof of your mouth.
Sure.
So essentially, why would you eat them too early? It was just like, it was idiotic. I sent it to like 10 guys that I used to cover when I was on the floor saying, do you think the cookies are cold enough? They were all just like, this guy is just, but it's funny when you go to these sort of larger institutions and you see their stance on this, you're like, okay, who paid you and who bought you and who bought you? Oh, yeah. And it's certainly not correct to say that. I want to pivot if I could, because you talk a lot about Europe and how Europe kind of wants to destroy us. Later on, I've got a question for you that I don't actually know where you stand on, which is going to be
okay. That's fine. Fair enough.
But talk to us about your opinion of sort of the European banking and their participation in NATO and their participation in the UN and all that, and how it affects us, because you have a good take on this.
That's a big one, right?
You take it whatever direction you want.
Yeah, what I'll say is this: the Europeans clearly have this kind of fantasy that the Soviet Union didn't get communism quite right. And the whole point of my argument is that we have a commercial banking system that built America, for lack of a better term. We had a private commercial banking system. It resisted the siren's call of a central bank for 150 years. Eventually they got one in. Now we're dealing with the after effects of it. We got seduced into becoming an empire. Here we are today. Okay. But it was always with the long-term goal of Europe being able to get its major colony back. That, they would break the United States up in some fundamental way, and the Brits and the Europeans, the colonial Europeans, would get their colonies back, and then use the United States effectively use it as their piggy bank. like where we get to be their shock troops in Europe and against Russia in the Middle East. We get to be their navy, because the Brits can't build a ship anymore, because they don't make them out of wood, so the Brits can't build ships anymore. And we're supposed to enforce the peace on Southern Africa to ensure that the French get to extract all the gold and uranium and everything else at literally less than a penny on the euro, right? Like, this is what they're supposed to. And by the way, we're supposed to pay for their health care and their welfare and their pensions and their defense and everything else, and then prove to us why we should continue to do that for them in perpetuity. That's always been the plan. We're saying no to that. That's clearly what's happening, because we're going to pull out of Ukraine, and there's all this other stuff that's happened in the last week or so that's clearly happening, and they're freaking the fuck right out, and it's great. I just like watching Macron like melt down is just like, that's like more popcorn, and I don't even eat the stuff anymore because it's bad for me, right? But I'm like, I'll make an exception to watch Macron like lose his mind. They want fiscal integration, right? And they need fiscal integration in order to collapse all their central banks into the ECB, right? Because that's the only way they can deal with all the debt. They've got 20 nations issuing debt at different rates and at different credit ratings and all the rest of it. And then they've got the ECB all it can do is like shuffle money around from one couch to the other, right? I mean, and that's what they're doing. And they've destroyed the Bundesbank. Like, they've destroyed the Bundesbank's balance sheet, and they've put all the toxic crap on the Bundesbank. And so they're at that moment now where they need to default. But in order for them to default, everybody has to default with them. Otherwise, they become the pariah state of the world. They want to default, of course, by going to a digital euro and then abrogating all the existing debt by doing what Britain's done a couple of times in its history, which is to issue perpetual debt, right? Issue consols. And George Soros has given us the path on this. So this is all what's in the background for these guys. This is what they're trying to set the table for. And the war in Ukraine is just a money laundering operation ultimately, and it's just a way to get the United States involved in a war it can't sustain either. And they'll take either Ukraine, and as far as the Brits are concerned, they'll take one in the Middle East as well. But that's what Israel and all that's about in some ways. But let's just focus on Ukraine. From Europe's perspective, it's just that, right? And they're freaking out that we're not going to go with them now, and that we're not going to seize Russia's foreign exchange reserves, because that would just destroy the U.S. banking system. That would just destroy everything, because it would destroy what's left of our credibility as anything other than the world's biggest bully. We're trying to walk back from that now that we've tried to destroy the Russians. Clearly, we have failed, and they're left holding the bag. And they also have no collateral. Europe was built on collateral that it stole from the rest of the world. It did so through mercantilism and colonialism, right? And we have vestiges of that, like France and sub-Saharan Africa. We have vestiges of it with the United States enforcing colonial obligations in the Middle East through the petrodollar previously, and then in Central Asia and then obviously in Central and South America and whatnot. They want a restoration of that, but they also need the United States to become the colony again. They built us up with their money, and now they want their colonies back, and they're not going to get it, because it's clear that the people who are running the United States, really running the United States, are like, you know what? No, that's enough. We fought your wars twice, and we're not doing it a third time. We fought World War I on your behalf. You fucked things up. We fought World War II on your behalf. Yeah, we got some benefit from this, certainly, no argument. But we're not doing it the third time, because this time it'll destroy us. Okay, because we get no benefit from this one. So Europe has no collateral because they pissed off the Russians, and they pissed off the Saudi Arabians, and now they're pissing off the United States. And we're the ones who produce all the hydrocarbons. If you listen to the way the European, and Lagarde was out there today, literally like an automaton, going, we need to print trillions of dollars in order to make the world safe for climate change. Chrissy, we're done. Go put the next scarf back on. Your Adam's apple is showing. Like, this is ridiculous. Like, stop it. Okay? Like, these people are literally on autopilot. They are literally like the automatons in a Philip K. Dick novel, for Christ's sake, just doing the thing. Like, they're just project managers reading off the Gantt chart and just, on today we're supposed to say this, and tomorrow we're supposed to say that, and that's where we are, and they don't know what to do.
But
because
Tom,
they're not smart
why do
enough.
you
So they're not
think
smart enough to run the system that they inherited.
why do you think we're fighting back now? It seems to me Ukraine, we send shit tons of money over there. We
did.
send shit tons of money to Israel. We just are opening the bank book for Haiti, which is great. That's going to really go to the people who need to. You're saying that you think we're saying no. What are the clues of that?
The clues are that that Biden's having to look under the Pentagon couches to find money to send to Ukraine.
Good.
Meanwhile, there's Mike Johnson going, "You're not getting another penny until you
Good.
close the border.
Okay.
You're not getting another penny until we get the Keystone." And then there's Jamie Dimon. "You're not getting another penny until you open the Keystone pipeline up." Like, or this or that. We start drilling, we start doing this and all the rest of it. You look at what the way Powell, guys, I can do 2 hours on this. You can look at the way Powell set up a virtuous trade to bring offshore U.S. treasuries that want to be dumped by foreign central banks into the United States in order to go back into our banking system. Like, he set up virtuous trades for this. He's made it agreeable. 5.5%, dude. He's making everybody rich by saying, "Hey, buy U.S. treasuries, buy short-term debt, buy whatever you want. You can get 5.5% on 6-month money, 3-month money." Like, who at our credit level is going to give you that kind of cash? Germany can't, Italy can't, France can't. Because if they do that, if they try to go with us, then their banks collapse because they have massive holes in their balance sheet, which is why I keep watching the German-U.S. credit spreads, because that's the canary in the coal mine. That's what Christie is managing. She's actually also helping, with the help of Yellen, managing U.S. Treasury debt levels. I firmly believe that the Eurozone, because I've seen it in the TIC report, they're buying the crap out of U.S. Treasuries in order to blunt the rise in the long end of the yield curve and keep the 210 spread inverted on purpose.
Okay, so we had an auction today. Again, we're recording this on Tuesday.
Yep.
And your auction wasn't bad, but it certainly wasn't good. Lackluster auction. Do you worry? And you talked about before something that I've been beating the drum of for a year, that she's going to the short end, taking advantage of the ready-made bid that's in the repo market, whatever. So are you worried that if she has to switch from that, if the demand on the short end starts to go away, and all of a sudden these long end auctions are showing without Fed sponsorship that they're not going to be as clean as possible, that the Fed is going to come back in, start buying treasuries, and that could start the dollar lower?
No, I don't think that at all. As a matter of fact, last week the Fed came out and said we should do reverse QT or reverse Operation Twist in order to combat Yellen doing yield curve control. They're literally saying we need to sell the short end, to buy the short end and sell the long end, because they want the yield curve. They want the long end of the yield curve to rise. The Fed wants 6% on the 10-year. I honestly believe they want a normal yield curve.
3% on the 2-year, 6% on the 10-year. I bet that's what they want. Right.
Yeah, they want a positive 2-year 210 spread, because then and if the banks can survive, if we can get back to a normal 210 spread, we get back to normal lending. Yeah, it may suck that mortgage lending is, mortgage rates are 8, 9, 10%, but so be it. Like, that's what they need to be.
Right.
So you spent a long time raising goats, and this I've been wanting to.
I've never heard a conversation begin that way. That's high level finance, by the way.
Yeah, we just did the 210 spread, and then we're going to hear goats. Okay, this is fantastic. I'm happy to do this one again. I wanted to. I mean, I kind of wanted to talk about that old sort of socialist refrain of socialism and communism work. It's just never been tried correctly. I thought it was really interesting that you pointed that out, and that people call America colonizers when actually we were the colony. That should be talked about more, but I want to get back a little bit to finance, which, believe me, this is a question about finance. You raised goats. I think the most marginalized community in the U.S. that is not recognized is farmers and ranchers. Absolutely. I don't think it has anything to do with race. I don't think it has anything to do with your ethnicity or any of that. Even your poverty level. The biggest marginalized and forgotten community to me is farmers and ranchers. And Great. Tell me, in your experience, how valuable it is to actually take part in some of those activities from just a general life and knowledge perspective. Oh, it was immense. I came rapidly to the conclusion that you either have to be a full-time farmer or you have to give it up. You cannot be a hobby farmer. So at one point, I think the most I ever milked were like 5, maybe 6 goats. And I'll tell you, processing the milk and feeding the animals was a full-time job. just
What
6
about,
animals.
what about meat? Did you butcher and sell to
Yeah, we
Indian
did a little
food?
bit of that. I had first I had meat goats, and then I went to milk goats, and because meat goats you couldn't make any. I couldn't make any money. I have a terrible plot of land for goats are particularly difficult livestock to raise. They're great on marginal land, but you need a lot of it, and you need to you cannot supplement them in any way. Like you can't make any money if you supplement them with either hay or grain. If you have to supplement with hay or grain, you're just losing money. And that's just the way it is. And it was really, really obvious after a while. I ran it for about 5 years because of, honestly, it was a great tax break. Like, because when, everything could be written off against the farm. And so I was able, I was losing money, but I was also I was also, all that was coming off of my AGI up front. And I wasn't paying a FICA on it and on any of it. So when I was making money when I was working for Newsmax, like my entire Newsmax salary I was losing money on the farm. And so that was really being offset. And so here I am making, let's say, and, high 80s or whatever. And I was still getting the earned income tax credit because I was losing so much money running a small goat farm.
That
Okay.
makes sense.
Because I could write everything off. Every time I, visited a friend and I sold them goat cheese, I could write off the mileage and the depreciation on the car and the this and the that. Every time we get into the farmer's market. And yes, we were making money, but at the same time, our costs were far higher in real terms than our revenue. And
So,
you have to love it to be a farmer.
so
It's just that simple.
Right. So I just spoke at an agriculture conference in Arizona. I love speaking out of industry, by the way, too. Those people were awesome. And the guy, Bobby, to your question, the guy who worked for Pioneer Seeds was sitting next to my wife at dinner. And he said, "Can I ask you a question? You guys are, city folk. Why does everybody treat us like we're the rubes and the morons?" And my wife, was giving him an answer. And I was like, wait, it's because those goddamn, city elites who think they're so much better than everybody else just like to lash out at people. That's about the size of it, right? And they think that anyone who doesn't live in their little echo chamber is a moron.
Russell
Great.
Brand put it perfectly when he said professional metropolitans.
Yeah.
That's what he called them.
Well,
Exactly.
it's funny. And for me, like, I'm a suburban white kid from, upstate New York, right? But, my parents were civil service. Mom was a nurse, dad was NYPD. I never slaughtered an animal, gone hunting or any of this stuff. I decided to do all this stuff because I wanted to know what it felt like. And I also wanted my daughter to grow up knowing where her food came from. And so I went through that whole process. And I never once really looked down on farmers because I came from a lower middle class background. But once I did it and I met the people and I saw what was going on, I'm like, oh, these people are getting fucked. This is so freaking hard to do. And you're at the vicissitudes of the weather and the this and everything goes bad. And I learned that I first went to Florida, I was a typical freaking New Yorker. Went down there like, oh yeah, these rubes in the South, they don't know what the hell they're doing. Oh boy, did this Yankee get his chain yanked, and his and my perspective get completely changed. And so now you're like, so what do you think? So what do you think about the recent unpleasantness? I think Lincoln was a tyrant. That's what I think. That's where I am now, right? So we call it the recent unpleasantness down here. We still do not call it the Civil War, FYI. That's where I live in North Florida, and I moved out of the city of Gainesville, which is basically shitlib central with the University of Florida, and it's like shitlib central, and then surrounded by rednecks, surrounded by cattle country. Where I am around in Alachua, Gilchrist, Columbia, Union counties, this is some of the highest producing cattle land in the country. Like, Florida's not worried if we have to break away from the union. We make all the fucking food you'll ever ask for. And I have friends who raise cows. I buy them off of them and stick them in my freezer. We have a lifestyle, that keeps one foot in this. So I understand what these people are going through, and having done it, and oh yeah, these are some of the most sophisticated people you ever know. Because in order for you to actually run a farm and make any money, dude, you have to be everything. You got to be a futures trader. You got to be a weatherman. You got to be a this. You got to be a small engine repair. You have to be a doctor, a psychologist. You got to be all of it. And they just don't get it. It's ridiculous. And having raised dairy goats, I can tell you that your whole life is subordinate to them. They're not there's like the whole PETA thing that pets are slaves is bullshit. The farmer's the slave to his livestock. We live to ensure that our livestock are given, they're only productive in such a way that's profitable for us to continue to doing it if they are as happy and as healthy and as predictable a life as you could possibly give them. They have to be on the verge of fat, well fed, on the verge of fat, so that they'll produce healthy offspring with no birth problems. And I mean, it goes, you want production out of them? Well, you got to feed them. It's an immense and intense relationship that you have with them.
I love
And
it. I absolutely.
I can't. You have no idea, guys, what it was like, what I went through on a daily basis just to try and keep them all alive.
I have a quick public service announcement for the people watching too. I cannot eat cow cheese. I cannot drink cow milk. I can eat as much goat cheese as I want and have zero stomach problems at all. Do you know anything about this or no?
Oh, I know a lot about it, but I don't know where you guys. I don't know where you guys want to go on this, but yeah,
no. It's just different molecular structure, right?
Yeah. I mean, no. Go. I mean, I'm a chemist too, so
let me
I kind of know this,
Tom, so that you can comment on this as well. There's a theory, Jim, that so I've gotten a hold of some raw milk and raw cheese, right? That of course is not for human consumption. I bought it for my pet.
Yes.
But I happen to drink it.
I used to make ice cream that was for pet consumption, by the way.
I had no reaction. No.
Really?
Yeah.
Interesting.
Because there's some sort of destruction of the lactose easing molecules when they pasteurize and homogenize at a really high temperature.
There's a lot going on. And raw goat milk is, again, it's like everything else. It all depends on who you are and what you are, what you're allergic to. There's a casein allergy that is just in all milk and you're just done. You can't eat anything. But if you're lactose intolerant, raw, even like my wife, for example, can't even eat raw cow's milk. Like she can't even eat that. I mean, that's part of the reason why we got goats, and dairy goats, are a really powerful economic actor. I mean, you are talking about, just for your own personal consumption, if you have a pair of dairy goats, they don't even have to be well-bred dairy goats. Like you feed them well, and and by the way, I've forgotten more about how to feed dairy goats well than any four people will ever learn in their lifetime. But if you're not producing for the purpose of making money, but in order to produce the highest quality food that you can, and you may be producing it, your own production cost of $4 or $5 a gallon, what do you give a shit? They produce 4,000 calories of high quality calories a day. Like it's insane what they're capable of producing. And then you've got cheese, you've got milk, you've got yogurt, you've got if you get a cream separator, you've got butter, blah blah. Yeah, it's great.
Tell me, I got to ask you the thing that, because we're coming up on our time limit, but I got to ask you the thing that I don't know what your answer is going to be. Give me like 5-10 minutes on your opinion on Bitcoin, because I don't know what it is.
Oh, my opinion on Bitcoin is I'm incredibly okay. So let's start from the beginning. I wrote the first publicly available article on Bitcoin in July of 2010.
That's awesome.
I do not own my own private island because I'm an idiot. Because I mined one of the original 50 Bitcoin blocks on an Intel CPU early on in the process. I lost those. Those are gone, by the way. Then I lost 250 Bitcoin when I had them at Mt. Gox, when I got a keylogger and the guy stole, and all that was being held on chain at the time, and I lost all that too. Doesn't matter. I love Bitcoin, but I'm not a Bitcoin maxi. This drives the Bitcoin maxis nuts, simply because I'm also a scientist, and I don't believe, at the end of the day, I'm also an economist. I don't believe that any one technology is the end all and be all of any technological thing. So I don't believe we've reached the end of the technological curve on money, period. Sorry, or assets, or whatever you want to call them. I think Bitcoin's a great evolution, but I reserve judgment on that. It's going to be that in 100 years, we're still going to be using Bitcoin. Or 500 years, we'll still be using Bitcoin. There may be something else 500 years from now. But I think between now and then, Bitcoin is a thing that is helping. It's a bearer asset, ultimately. It's the best way to describe Bitcoin in the modern market is it's the 21st century version of bearer bonds. Bearer bonds.
Gotcha.
Right.
Gotcha.
At the end of the day, that's what it is.
Right.
You can present, you have the keys, you have the coins, you have the things, they're yours. You show up, they are, you have Bitcoin. You can then You can always get a hold of it. You can move it across borders. You can store them in your head with a mnemonic. If you know your 24 word code in order to recover your account, you don't need the software. You don't need anything. They are a 21st century version of bearer bonds. And they're better than gold from that perspective. But that doesn't necessarily mean that Bitcoin is a replacement for gold or anything else. I think that this is where the Bitcoin maxis go wrong in their religious fervor and in their enthusiasm. And I think it now borders on a kind of religious fervor. Every time I say this, they of course go, "You hate Bitcoin." I'm like, spoken like a true religious zealot. And then, and then we argue on Twitter for a couple of hours. And then I mute them all and I move on with my life because I have better things to do, like buy Bitcoin. Because I do own Bitcoin. I do love Bitcoin. I think Bitcoin's amazing. I think it's very important. I also think it's becoming, as my friend Vince Lanchi puts it, a strategic U.S. asset. And that's what the Bitcoin ETFs were all about. And I think Gensler was forced at the point of a gun to approve them. I think that they have set up the same structure for Bitcoin now that they're also setting up for physical gold, which is that the COMEX is going to be depreciated and removed from the system, and that retail gold investors will be able to buy GLD or some other gold security, but they will not be able to buy, and they can buy physical gold on, from APMEX or whatever. They're not going to stop us. But the goal now is we're in this moment where the US and all the major economies are now trying to stop the physical gold from moving from place to place and going strategically from central bank to central bank. The gold flow from the United States to China is going to end. And if it does, if it doesn't end, it's only going to go through trusted intermediaries. Those trusted intermediaries are, well, we know who they are now. They're the custodians for GLD, JP Morgan and HSBC. Well, guess what? The same system is being set up for Bitcoin, for all the ETFs. The intermediaries are JP Morgan, HSBC, a couple others. And the US government is putting guardrails around it and soft capital controls around the movement of Bitcoin and the movement of gold around the world. And they're doing it on purpose because they're trying to keep capital from fleeing.
So you think Bitcoin...
We're going to be allowed to speculate on the price of gold all we want. That's not going to change. It's, there are going to be tax advantages for being in the Bitcoin ETFs. If you want to put it in your 401k, you want to put it in your IRA or whatever, same thing with gold. But as far as, and if you want to buy Bitcoin on the exchanges and take them off and put it in a self-custody wallet, you'll still be allowed to do that. Fed doesn't care about Bitcoin. Fed likes Bitcoin, I think. But the Fed was waiting, and this is something I'm going to talk about the next time I have Caitlin Long on my podcast, because she's asked me this question a couple of times, and now I can finally answer it for her, now that we've seen how the Bitcoin ETFs have worked out. The Fed wasn't ready for her Custodia Bank and the stuff like that she's doing. They weren't ready for it because they didn't have the rest of the infrastructure in place to allow for that to happen. She was way ahead of the curve, and I think rightly so, she was way ahead of the curve, but providing a market service that we need, just not right then. And now that we have the structure in place, now it's all going to move forward.
So in a short answer, because I know we're butting up against time,
sure.
You think we're past the point of no return for the governments to crack down, eliminate Bitcoin, all that bullshit? Yes.
I never believed that in the first place, because I never believed that the DoD had the keys to SHA-256. And if they did, then we have a bigger problem than fucking Bitcoin. The entire internet runs on SHA-256 encryption.
Perfect answer.
That's simple. So, I mean, if you believe that they have the keys, the backdoor keys to SHA-256, great. Then none of it is secure. It's all bullshit, and they're going to steal it all from us.
And we're all going to raise goats on somewhere.
Or, and then guess what? We'll just make Bitcoin 2.0 and we use a different encryption code that they don't have.
Good point.
This is the point of the argument about the thing. That's why Bitcoin isn't it doesn't necessarily have to be the thing. What matters is the idea itself is the genie you can't put back in the bottle. Moreover, last point about Bitcoin. What liquefies the Bitcoin trade? What liquefies the Bitcoin trade? What do we trade? What do we trade Bitcoin against? Nobody trades against dollars. We trade against Tether. What is Tether? It's $100 billion U.S. Treasury slush fund.
Yeah. Oh, right. Yes.
And it keeps rising in value. As Tether's market cap keeps going.
Explain Tether to me in a way that makes sense.
Tether makes perfect sense to me now that Letitia James gave it the slap on the wrist, and I think the Fed controls it.
Tom,
I think the Fed controls Tether. I think the Fed executed all the other stable coins
That would explain
in order to have control over the Bitcoin trade in that respect, and know that, okay, Tether's audited. They own a little bit of Bitcoin. They own a little bit of gold. They own about 85% in short-term treasuries, and we're okay with that.
Wow. And that's perfectly reasonable to me. Can you tell the people where to find you, Tom?
Sure. You can find me over at goldgoatsandguns.com. Over at my blog, you can find me over on Patreon at patreon.com/goldgoatsandguns, where I do twice weekly market reports where I go over technical state of markets. I do a rant like this one, opening statement rant like this one twice a week, plus private podcasts and private blogs. We do all that for about $12 a month, and a monthly newsletter with a portfolio, about $12 a month. And then on Twitter, TFL1728, where this version of me and worse will show up on a daily basis because I'm an asshole.
This is a great version.
I love what I do.
Okay, you people out there, thank you guys so much. This has been, I hope you guys have as much fun watching this as we had recording it. Tom Luongo was an excellent guest. Thank you. Remember the reason we do what we do here. Both Bobby and I have kind of been bounced out of mainstream media for having too many opinions. We think the whole model is morphing towards this independent media where people can give honest facts. More importantly, they're honest opinions and not have to couch them to kowtow to any sponsors. Yes, we have sponsors. Mint Mobile, thank you very much. No sponsors are ever going to tell us what to say, and that's what you can expect from us. And thank you guys very much. This has been the Futures Edge Show. I'm Jim Uriel. That's Bobby Chino, and that's Tom Luongo.